All right, let's just jump right into it. The crypto market has been a wild ride, and this past October really threw a wrench in the works, catching a lot of people completely off guard. And now it's left everyone asking one huge question. After a month like that, is a massive, explosive year-end rally even still in the cards? Or was that downturn a warning of what's to come? Well, in this explainer, we're going to break down both sides of the argument, looking at exactly what the source material is telling us. So first things first, we've got to understand what just happened. Why did the market take such a nosedive? And here's what makes it so jarring. October is historically Bitcoin's best month. It's almost always green. So for it to flip negative this year, well, that was a huge curveball that surprised pretty much everyone and really put a damper on things. So why did it happen? Well, it really boils down to what the sources are calling the uncertainty trade. Think of it like this. Crypto is a risk-on asset, a bit like a high-growth tech stock. It does best when things feel stable and certain. So when you get stuff like a US government shutdown messing with ETF applications or threats of new trade tariffs, investors get jumpy and they sell. But look at the flip side. Gold, the classic safe haven, absolutely soared. It thrives on uncertainty. People run to it for safety. It's a perfect picture of the two completely opposite forces battling it out in the market right now. But here's the thing. Even with all that uncertainty hanging in the air, there's a really powerful historical case for a massive rally. And it's all about something called the 10-day theory. Just look at this data. This is pretty mind-blowing. The purple bars, those are Bitcoin's total gains during its best 10 days of the year. The gray bars show the returns for the other 355 days. See the pattern? It's incredible. Almost all of the massive gains that Bitcoin is famous for happened in this super short, explosive burst. If you just missed those 10 days, you were often flat or even down for the year. What this tells us is that Bitcoin's big moves aren't a slow and steady climb. They are sudden spikes, probably triggered by huge news or big institutional players finally jumping in. And that theory is exactly why you see analysts like Tom Lee from Fundstrat making such a massive prediction. He's essentially saying, hey, even with just a few weeks left, those 10 explosive days could still happen. And if they do, he thinks a $200,000 price target is still possible. So what could possibly trigger a move like that? What are the actual catalysts on the horizon? Well, let's look at some of the real-world signs that this market is actually growing up and getting woven into traditional finance. And we're not just talking about hype here. This is real integration. You've got the S&P creating a crypto index, just like the S&P 500. You have a sovereign wealth fund. That's a country's money making its first ever Bitcoin allocation. BlackRock, one of the biggest money managers on the planet, is launching a Bitcoin product in the UK, and Morgan Stanley is basically opening the doors for all its investors. Any one of these is a big deal, but all of them together, that shows a clear, powerful trend. And here's maybe the biggest catalyst of them all, getting some clear rules. The main piece of crypto law in the US, the Clarity Act, is apparently making huge strides. According to Coinbase's CEO, who's been meeting with senators, both sides of the aisle are 90% on the same page. The hope is to get it out of committee by Thanksgiving. If that happens, it could finally give the market the regulatory certainty it's been desperately waiting for. Okay, so those big picture catalysts could set the stage for the whole market. But a rising tide doesn't always lift all boats equally. The sources we're analyzing also point to a few specific altcoins with some seriously strong fundamentals that are definitely worth a closer look. First on the list is Ethereum. Now, its price has been kinda quiet lately, but the actual activity on the network has been anything but. Get this. Ethereum recently saw $27.6 billion worth of value transferred on its network in a single day. That is a record. Think about what that means. It's a huge sign of liquidity and actual usage pouring into the system. This is a perfect example of the underlying strength maybe getting way ahead of the current price. Next up, Solana, and they are making an incredibly bold claim that it's getting ready to be faster than the NASDAQ stock exchange. And that's not just an empty boast. Listen to this. The head of DeFi at Galaxy says that with planned upgrades, we're going to see Solana hitting 1 million transactions per second. At that kind of speed, it's not just a competitor to something like the NASDAQ, it's so fast that the NASDAQ itself might want to build on top of it. That's a total game changer, right? It goes from being a rival to being the actual foundation. And finally, there's a project sitting right at the crossroads of the two biggest stories in tech right now, AI and crypto. And that's BitTorrent, or Tau. Its mission is massive,
to build a decentralized, permissionless network for artificial intelligence. So basically an open and global alternative to the powerful AI models that are all controlled by just a few big tech giants. It's a hugely ambitious goal. And this has caught the attention of some very, very smart money. Barry Silbert, who was famously early on Bitcoin, says the next big wave is this mashup of AI and crypto. And he believes the one project that has already reached escape velocity is BitTensor. I mean, that's a pretty powerful vote of confidence in its momentum.
Okay, so we've got the 10-day theory, we've got the institutional money, we've got some strong altcoins. But, and this is a really big but, for any of this to actually play out, a few major things in the wider economy need to fall into place. So here's the bottom line. It all comes down to this checklist. For the bulls to really take charge, these three things pretty much have to happen. 1, the US government has to reopen. That gets rid of a huge cloud of uncertainty and, crucially, unblocks all those pending Bitcoin ETF applications. 2, the Federal Reserve needs to signal it's done with quantitative tightening. That's the process of shrinking the money supply that's been tough on assets like crypto. And 3, the US and China need to strike a trade deal and avoid new tariffs. If those 3 dominoes fall, the market gets the certainty it's been craving. And if that certainty comes back, well, according to the sources we've looked at, that $200,000 price target suddenly starts to look a lot more plausible. So there you have it. That's the setup. On one side, you have this explosive historical pattern, the 10-day theory, and a wave of real-world adoption just waiting for a spark. But on the other side, you've got these huge macroeconomic hurdles that could just keep a lid on everything. It's a classic showdown between incredible potential and some very real peril. Which one is going to define the final chapter of the year? Well, that is the big question.